How do you control your emotions when trading? I feel nervous when it goes up, down, and nervous when it goes up. The only time I am not nervous is sideways movement. Well, this is very important. And as you know, we've done one, two, three, four. We've done 4 videos around personality traits and what it takes to be a successful investor. The fifth installment is coming out next week, and we're going to talk about the profiles summary of not only great investors, but over 4,500 people completed our survey. Unbelievable. We're trying to figure out a way to get the individual responses back in a safe and secure manner because we don't share any data. Of course, we're not into that, but we didn't expect 4,500 people to complete the survey. But part 5 is coming out. It's going to be part 3 of the latest block that looks at a lot of data. We're going to look at the community, which is really, really amazing. All the different cuts you can go in and talk about as well the playbook that you need. So one of the elements, a sneak preview of what we're going to do, we're going to dismantle traits that sometimes can hold people back from being really, really good investors as we go forward. And one of them is the feeling trait. That's the F in the Myers-Briggs. If I am an F, I'm a feeling person. How can I remove emotion when I invest? And this is the question you're exactly talking to. I always say I invest like a machine. I don't care what people say. I don't care what people do. I do my own homework and I go in hard. I took exceptional risk on the 24th of January and the 23rd and 24th of February. I literally put all my chips on the table all at once. I took on huge amounts of margin. If the markets went against me, I could have been wiped out. But I kind of did it because for me at this stage, it's about fun. And I have this little bit of a gambling gene, which is very, very bad. But looking at this, when you're a feeling person, they typically use their hearts as guides. They make decisions based on beliefs and values. And all of the top investors have the T, not the F. T is for thinking quality. Again, thinkers use logic and reason to make decisions. So basically, we're going to come out with a playbook of what you can do to shore up your gaps and get rid of that emotion. So wait this week. I don't want to give it all away now in this Q&A, but it's a sneak preview. Hopefully it'll be out either Monday or Wednesday. So we've been working a lot. And it's been also, I just want to say, Elon Musk talks about frying brain cells, building factories and solving hard problems like SpaceX. This for me is the hardest challenge that we have faced in the team. A big thank you to everybody behind the scenes. We have had 3 people working on this for a long time. So investing in crypto is easy, but helping people build frameworks and playbooks to shore up personality traits, unbelievable, very difficult. So next question is from Abrasive Justin. Every time I buy a stock crypto, the price immediately drops. Is reality a simulation designed to torture me? This is incredible. It's like everybody's now reflecting inwards, looking for blind spots as they go forward. So it looks like our series of looking at personality traits and what it takes to be a great investor is really working. So thank you for this question, Justin. So first of all, if you look at this whole blind spot awareness, this is the simple way of thinking about it. One, you've got your hidden area, which is not known to others, but known to you. And then you have known to others, your open area, the red, and it's also known to yourself. And this is the tricky part here. This is the piece we're trying to help you understand more, is you're not known to self and maybe known to others, or not known to self and not known to others. Total blind spot. But we're really working on uncovering that. Now, it is not you, okay? Markets are very volatile. It's a blood sport, etc. Like I said before, nailing perfect bottoms is not easy, but it's possible. And follow macro. Research your assets hard. Have target prices. Use TA to find optimal entry points. And this is probably the most important thing. Don't be worried about short-term time preferences. The longer the time preference you have, the more things will work themselves out. If you have a solid conviction in things like, I don't know, Bitcoin and Tesla, my 2 biggest holdings, and I have extremely solid, like 99.x% conviction in those names, don't worry about what happens short term. Like I see, if heaven forbid Tesla goes to 400 tomorrow, I don't care because I know it's going to 1600. And it just means I got to get rid of other stuff and buy more. So when you have a longer time series and full conviction, you've done your homework, you're going to be just fine. The other thing as well that we proved with part 2 of our series, we looked at the legendary investors. They all like longer time preference. Time preference is the relationship to our composite score, and correlation is 46%, and the R squared is 0.182. This is critical. It's very difficult. There's very few investors that can just jump in and make money in an hour and then jump out. So you buying something and it falls, don't worry about it. Move on. But when you have high conviction and you've got time, be patient, wait for things to come to you, wait for things to perform. It will always happen, because what I say, gravity, the crap will fall away and die, and the good stuff will float to the top. That's just how it works.